Welcome back, Chart Addicts, to the Expert Trader podcast. We have a very special guest today. Last time we had this guest on, we were at 200 subscribers. After the podcast that we did together, we were up at somewhere around like 650. Raja, I want to say thank you.
Ooh, wow. Nice. Thank you.
Very loyal following, and for a good reason. Raja is one of the most transparent people that we've seen on social media, not in terms of let me post my profits, let me show people if I'm winning or losing, but in terms of here's my rationale for my decision making. And I feel like that exposes him to a little bit more scrutiny than other people. And because of that, I respect you, Raja, for being out there and putting yourself out there. Raja, long intro. Thank you for coming back on the Expert Trader podcast.
Yeah, my pleasure. My pleasure. I was actually surprised that you said you wanted to do part 2. So yeah, it's glad to be here, man. Really appreciate it.
The first one, it was mostly just tips to the new guys, tips to new traders. How can they get their mind around it? This one, I feel like, is going to be more geared towards the developing trader. Someone who's already on the way. They might be in that boom or bust cycle. They might be in a place where they may have just started being in profits. And you and I both know that there's a fall off point. If they're not consistent enough, then they can fall off. It's a continuous game. So I kind of want to gear this one towards those people. Raja, real quick, can you talk to us about consistency? Can you talk to us about your podcast or your live streams every morning and how they've helped you become a more disciplined trader?
When we started the live streams, I think we started live streams back in 2018, August 2018. And the platform we used back in the day was Twitch. And the whole rationale towards those live streams was basically, it was my good friend, mentor, Ted. He basically said that since we're doing private webinars and since we're winning, I think it's going to be a great idea to maybe showcase it publicly to people and have someone wear a mask and just trade, make money, and then say, we made money today, and then call it a day. You know, and we're like, that would be a pretty good idea. We could probably do that. And so we started Twitch. So we didn't have a mask or anything like that. It was just like, Twitch stream where we just did commentary on the charts and stuff like that. And the main idea was to just show people that it's possible if you follow a plan. So some people we have right now on the YouTube stream, so we moved from Twitch. Twitch banned us due to some reasons, and then we moved to Mixer. Mixer is another platform we moved on to. Now, the funny thing is, when we moved to Mixer for our live streams for New York, what happened was that our viewership from Twitch, which was around like 200 to 300 people, it dropped down to 150, 100 viewers. And what I found out was that some countries, they don't allow Mixer to operate, based on their regulations or whatever the case may be. And then I started looking into that. Okay, what if we move to YouTube? Because YouTube is mostly like widely available to everybody. So when we moved to YouTube, man, first 2 days we had around 200 viewers. By the end of the week, so we started on Monday. By Friday, we had 500 people watching live.
Jeez.
And that just blew me away. And then it became much greater because like the week after that, we had close to 800, 900 people watching live. And that really showed us that maybe people were coming back just to see how we were operating in the market. Now, the whole reason why we still continued to do the YouTube streams was to just really test myself as my skills, my analysis, my entries and exits. Because the thing is, like, when you're watching someone trade live, even though I'm not showing my MetaTrader or any terminals, because that goes against the guidelines in some aspect, because then you fall into the category of giving financial advice.
Yep.
Right. So we wanted to stay away from that. So we moved to TradingView. And the thing was, everything I was doing on my platform was being replicated on TradingView. Like if I'm going to enter a position, I had to tell people, hey, I entered a position. It wouldn't be something like, okay, hey, oh, this was a nice move. I took this trade and I made money, then that doesn't help anyone, because you have a lot of, services like that do say, hey, you guys, look at this move here. We caught this move. But it's a different element when you tell someone, I entered right now, because now your emotions are at stake, your word is at stake, your money is your whole reputation is at stake.
Exactly.
Right? Your whole reputation, because now when someone's outside looking in, they'll look at the fact that, okay, this guy just entered. Let me see where his emotions are, right? Let me see what he's talking about. Let me see what he's thinking about. Oh, price is in drawdown now. What's he doing right now when price is in drawdown? Oh, price is in profits. What's he up to right now?
Yep.
So I think that brings a whole level of understanding and learning, in this industry. And I think the other thing is like when we started, the consistency factor, I had to stay consistent because, like, on social media we all talk about, yeah, stay consistent, don't overtrade, don't over risk, take 1 to 2 trades a day. So for the first year and a half, we kind of like worked on building up the following by being as transparent as possible. Then I think by since March, I decided to really up the stakes a little bit. For all the trades I'll be taking, I will show them on my social media, whatever, the whole month of March, April, the whole month of May, so that's just to prove that you don't have to overtrade. That's also just to prove that if you're really looking to get consistent, you don't have to look at the charts all day long. I mean, it does not make any sense because, like, we all come to trading as a means to, like, okay, like you know what, when we want to start trading, we want independence of time. And if you're trading from, let's say, 6:30 to 9:30, and then you're done after that, there's no point in looking at the charts beyond that time,
Sure.
right? So I think
Yeah.
consistency, I mean, the streams, it really helps. And what we've been noticing is that some people who started with us from Twitch days, they're still with us in YouTube streams. Like, I remember the nicknames, and some of you guys are probably watching this right now. And the consistency of some people have also increased because, like, when you surround yourself with good people, you become one of them, right? So the live streams, they work in the same way, because now when you're involved with a team, even though not directly, but you're still picking up their habits, right? They're saying, okay, this guy is closing early, maybe I should start closing early too, right? Or if this guy is always securing profits, maybe I should start to do that as well. Because, to be honest, I learned just by looking at people who are doing better than me, right? You have Ted. There was this other guy, Frank Edward. I'm not sure if you know him, but he's a futures trader, right? And his whole idea was that he would only trade in the evening times, and that's it. So I thought about it. I'm like, okay, well, all these profitable traders, they have certain things in common. They trade at the same time every day. They have specific instruments they will look at, maybe, like cable, GJ, gold, oil, whatever, and they just stick to those things. And all the other 90% people who are losing, they're looking at the opposite things. They're looking at, like, like 10 pairs, 15 pairs. They're trading, like, times when they shouldn't be trading. They're looking at the charts at the mall, at the gym, so those things I really had to eliminate through the live streams to show guys, hey, listen, if you can be disciplined, it's just a matter of time when you really start to see positive consistency, and positive consistency means, like, actually starting to see some profits come in, not just being like, hey, I'm consistent.
No, for sure. Is consistency mean consistency in profit or consistency in discipline?
Consistency in discipline, right? That's the most important, because when you're disciplined, no matter if you're like winning or losing, right, the first step is being disciplined. When you can be disciplined based on, okay, the time you're going to trade, you're disciplined enough to come to that time, you're disciplined to just trade 2 pairs, right? So you come to the charts with that mindset, right? You're disciplined to know that, hey, I'm only going to take 2 trades and that's about it.
Yep.
Right? And then consistency in monetary terms, it comes after that.
Okay.
Right?
Oh,
So
yeah, it's like a cause and effect. So, Raja, you talked about over trading, and then you talked about some things that are common between winning traders. So I kind of want to highlight both of those. A lot of people always hear about that, don't overtrade, which is why I think it's so important. What you're doing is that you're showing people that by trading less, it's actually going to be more helpful because you don't have to stare at the charts all day. The emotional risk of being in the markets is there and done. So if you're trading for 2 or 3 hours, that's your job. You have your result there. You can walk away. And so I think people, by seeing that, they understand they don't have to take 15, 20 trades a day. And I feel like that's kind of the most helpful thing about the transparency. Now, you talked about a lot of the successful traders trade the same time, same instruments. Did you remember your shift between when you were doing something different? Like, was there ever a point in your trading where you were trading more than 10 currency pairs and that was kind of working for you, and then you ended up transitioning to 1 or 2?
yeah, there was a time where I was looking at almost 10 pairs, and it would work out to like I would wake up to trade the New York session, and I'd be looking at, I remember USD JPY, USD CAD, GBP USD, gold, GBP JPY, Euro USD, and Euro JPY. This was in the New York session, and it was madness. It was madness. So we were flicking through 10 charts trying to find a trade like fiends, and
Like
it
addicts.
like addicts. Yeah, exactly. And back in the day, what we were trying to do is we were just looking at supply demand areas based on the 4-hour charts, and whichever currency pair's 4-hour candle is closing at support or resistance, I would just blindly take a buy or a sell, with a 10-15 pip stop, and I just let it go. And then I would do the same thing in the Asian session. I remember at 9 p.m. Eastern, the 4-hour candle would close, and I strictly remember we were at the dinner table. It was Ramadan, and so we were just trying to open our fast. And 9 p.m. AUD USD 4-hour candle was at resistance, and my account was at, I remember it was like around $4,500. I opened 8 lots back then. Yeah, there was no, I mean, we didn't know any risk management at all. It was just like, okay, it's at resistance, time to take a sell. Opened 8 lots. In 10 minutes, that thing fell around like 20 pips. So that was the most money I've ever made in the shortest amount of time, at like $1,600 in like 10 minutes. And that really blew me away. Now that came as a blessing and a curse, right? Blessing was that obviously I made money and felt good, but the curse was that it can happen all the time, right? That was the curse. And what happened was, then I would go to bed, I wake up at like 2:30 to trade the London Open, and same thing, look at 8-10 pairs, and like, if I get stuck in a drawdown, guess what's going to happen now? I'm going to be awake till New York, right? I'm going to be awake till New York, because like, if I take a loss, then I have to cover that loss in New York session. And now my whole day is ruined, because, I've ruined my sleep, and now I have to be awake and go to work with that bad, taste in my mouth about like, having losses and stuff like that. So did that for about 4 or 5 months. It kind of like worked out, kind of didn't as well. But then at the same time, what happened was, then I started to look into some other things, like Fibonacci's and all those other types of things to trade, and that really didn't help with my consistency at all, because it moved from a very, very simple method to trade to something kind of like complicated now, when you're like, when you're introducing contradictory analysis like
Yeah.
indicators and Bollinger Band. So that really hampered my progress back in the day.
Okay. So you're not saying that using the indicators is inherently useless, but it does add an extra level of complication that just reading price action, provides.
Yeah, I mean, indicators, they do work. But the thing is, like, if you're looking at price action, and if you think price action makes sense for, let's say, price to go bearish, and
Hmm.
if you add on a indicator, and if that also says it's bearish, then that's an extra confirmation,
Okay.
right? But sometimes, what's going to happen is, now, on Friday, we had a massive, massive move on GPJPY,
Yeah.
right? It just kept going bullish. And when something is running up like that, when price action and candles are making higher highs and higher lows, and for a fact it's going to continue moving up, most indicators will indicate that it's at a super high level.
I see.
Most indicators will point to the fact that, okay, it's time to sell, it's overbought.
Okay.
So that's where contradiction comes in, because when price is moving up and you slap on a, let's say, a Bollinger Band, and then price is getting out of the what is that? Is that a 14 MA on the Bollinger Band? If it's coming out of it, that's an indication to say that, hey, it has to come back down,
Yep.
right? Or if you have a Fibonacci drawn and it's reaching like some percentage level, you're like, okay, this is a key level, it should drop. But so that's where contradiction happens,
Sure. Does
right?
reading momentum and price action come from a rational understanding, or is it more of like intuitive? Since you've seen it so many times, if price is looking this aggressive, it's most likely going to continue. Or do you have a rationale for how you look at size and like, how steep the trend is to tell
Hmm.
how aggressive momentum is? How do you go about understanding that?
Yeah, see, when price is in a lot of momentum, so first you have to understand what momentum really is, right? Momentum is, you can't really see it in the chart, and you're right, like it's more of a intuition that you can kind of feel momentum. And And what I mean by that is, like, let's say if you're looking at a higher time frame, and on the higher time frame, you know that there's a certain level where price has to reach, right? And then on smaller time frames, you see that it's kind of like consolidating, it's trying to break, and but it's not breaking enough. But once it starts breaking, and if you look at the time that, okay, this is probably New York Open, or this is probably London Open, and there's a target in sight, then you can kind of say that, okay, maybe price is going to move in momentum now.
Okay.
So you're like anticipating momentum, knowing that the most logical place for price to go right now in time of volume is that target you have already set on the higher time frame.
All right. Raja, do you think about things in terms of probability? Do you think in terms of how probable is this to go my way, or what's the probability of this playing out, or do you just kind of know the probability in the background and just play your game?
Oh yeah, I know the probability all the time. Sometimes, like, just like you mentioned, like, let's say if price is really, really steep, that it's straight up. You don't know whether it's going to come down or go up. I mean, we don't know that, right? So when price is really, really steep heading bullish, the worst thing you can do is try to take a sell.
Okay.
I mean, it's going to look good if you take a sell and price just starts retracing, and it just happens that your sell is at the top of the wick, and you can post it on social media, send it to your friends. You can say, oh yeah, look, I'm the best, I predicted this. It's all good.
Yeah.
But the fact of the matter is, that's not going to happen all the time, right? You might get that once. Price continues to move, hits your stop, you take another sell, hits your stop, you take another sell. And then before you knew it, you've taken a bunch of sells just to get that perfect sell, right? So whenever price is very steep, moving up or down, I think the best way to approach is that that's the point where there's a lot of momentum in the market, right? That's like when you have something that's very, very volatile, or something. Let's say you have a hot frying pan,
Mhm.
and like, before washing it, you have to let it cool down, because if it has oil in it and it's really, really hot, you try to wash it, it's going to catch fire.
Yep.
And that's the same thing when price is moving very steeply. You have to just sit back and let it retrace, let it come down. Because the thing is, now I learned this in another podcast, and they said that whenever price is making a high or a low, there's a very high chance price will always retest that high or a low. So in the same way, whenever price makes a high, let's say on BBJPY, we made a high, price retraced, created a support,
Yep.
and then continue on going bullish,
Yep.
right? So that's how I approach when price is really moving up or really moving down. Just sit back. I don't touch it. I wait for price to like calm down. You always need to approach the market when it's calmed down, because there's going to be a phase of high volume,
Mhm.
and then there's going to be some ranging, consolidation, ranging, and then there's going to be another phase of high volume. So if you look at New York, what you're going to notice is that there's going to be some sort of volume in pre-New York. If
Mhm.
there's no volume there, then the next volume is going to come at New York Open,
Yep.
right? If it still ranges there, then the next time is going to be NYC Open and London Close, and so on and so forth.
Yeah. If you guys are listening, that's the patience that we're really talking about. Is if you guys understand the way that volume moves in different sessions, you're not going to have this expectation that price is going to move linear as soon as you enter a trade. So a lot of the thing I see with new traders is that when they enter a position, they're going to expect it to immediately go, to the TP, or it's going to move in a straight line or something like that. So I'm really glad that you mentioned that, how there's periods of impulsive moves, there's volume, and then there's periods where price ranges, and then there's continuations or reversals. So it's really important to understand the bigger picture. Now, you talked about if you were entering a certain position and doesn't go your way, you keep re-entering that position. Do you have a predetermined number of trades that you're willing to take on that trade before you cut it off, like a limit?
Yeah. Basically, what's going to happen is, I'm always going to think of it in terms of probabilities. Just like I mentioned, when price is, let's say, trending bearish, and it's pulled back, it's created a minor resistance there, and that now the candles are flipping bearish, and then you ask yourself that, okay, what's the probability that price will continue moving down, versus what's the probability it's going to continue moving up?
Mhm.
So when you have something sure like that, and then you start to look at, okay, there's a very high probability price will continue moving down, so then you're going to execute on that idea. Because in trading, I mean, this may sound counterintuitive, but in trading, we're not here to make money. We're here to have good, solid, profitable ideas. You know, because if you can have profitable ideas, those ideas are going to run on to make you money. You know, because whenever you start trading, you're not like, you're never going to start with $10,000 or $50,000. You're going to start with like 500 or $1,000. Like back in the day, I started with $1,000 because that's for something I could afford to trade, or that's for something I could afford to lose. You know, so I started off with a smaller amount to see if I can have good ideas. You know, if I can have good ideas, then sure, drop in 10,000 or 15,000, because now those good ideas are going to make you some money, which you can say, okay, now it makes sense from monetary terms. You know,
Okay.
so now going back to the idea of like when we were talking about probabilities, you know, and when you know something has a higher probability to go in your favor, I
Mhm.
would normally give it 2 chances. You know, I take a sell, and if it works out, perfect. If it doesn't work out, maybe the entry was too early, it was too late, or maybe one of the candles it wanted to, like, you know, break a high of the previous candle and then come back down. So it is what it is, right? So after the first loss, then I would give it a second chance as well. You know, so I'd give my bias 2 chances, and if those 2 chances are exhausted, then that means maybe I'm not seeing something right, or if there's something wrong in the market, and then I'm going to call it a day at that point.
All right.
Because then there's no point in taking a third trade, a third sell, or taking a buy, changing the bias. You know, like I've
For sure.
tried it, tested it, doesn't work. It take a loss. I've seen new people do that as well, and you fall into this orb of, like, you know, selling and selling and then buying, and price just coming down, then selling again, and it's just disastrous.
No, you're taking me
Situation.
back. Yeah, those are the worst times. So you're so conflicted. You're getting all the conflicting information from moving averages and from price action. And so you're just
Mhm.
buy, oh, maybe it's going my way. It's the whole thing is, I think, trying to get in that perfect trade without having the patience to wait for the perfect entry. All right. So I want to take it for on the subject of technicals. There's something that you mentioned in one of your live streams that I actually want to touch on. So you mentioned something about trading with the trend. And it's if you're trying to take the buses that go on the right way and all the buses are moving left, why would you get on the buses that are moving left hoping that they're going
Yeah.
to go right? I think it's a really great example. Can you touch on that a little bit?
Yeah, it's basically li- li- like the best example is, like, let's say if price is moving bullish towards a very, very strong zone, right? Like a daily resistance or a weekly resistance, and I would see people take sells, and I've done that as well. You know, like I take sells, and when price is moving to a zone and you're expecting price to retrace, you know, and price goes into a little bit of a drawdown, and then price retraces, comes to your break even, you see a little bit of a blue, and then you're like, okay, perfect. Now I see a little bit of a blue, it's going to continue coming down. But if the candles are moving bullish, this means the candles are moving bullish, right? Like a lot of times people do say that the candles are moving bullish, but this. You know, whenever you say but, you're you're basically saying that, okay, my idea is not valid yet, but based on this, it's valid. You know, in the same way, when you're trying to take a profitable trade, you say, this looks like it's going to go down, confirmations are there, but this. Now you're talking yourself out of the trade,
Yeah.
right? So when price is moving bullish, when candles are bullish, the simple thing it means is candles are bullish, there's no sells. You know, for candles to go down, you need some time frame, I'd say the 30-minute or the 1 hour, to close bearish, so that now you have one confirmation.
Okay. So what time frame? You just mentioned the 1 hour. Is that the time
Mm.
frame that you use to determine the trend, or do you work top down, or how do you do that determination?
I basically look at the 30-minute most of the time, because when you go down to the 15-minute and 5-minute, those are very weak confirmations. You know, the thing is, the 15-minute and the 5-minute candles, they close really fast in terms of, like, you know, when you're looking at the daily 4 hour, the 1 hour, and the faster they close, more opportunities you have to trade. You know, when you have more opportunities on smaller time frames, those are bad opportunities. You know, those aren't good opportunities, because those are weak confirmation time frames. You know, sometimes you may see some sort of confirmation happening on the 15-minute, but most of the times you'll see that those confirmations are short lived. You know, they don't really play out. So that's why some people say, oh yeah, I trade the higher time frame, the 4 hour, the daily, they're really good confirmations. Same thing when you're trying to intraday, when you're trying to trade intraday, you'll find that the 30-minute and the 1 hour are really good confirmations, but you're waiting an hour for the candle to close. You're waiting 30 minutes for it to close. And when you do get that confirmation, it's extremely strong than the ones you're going to get on the 15-minute or the 5. So in the same way, when you were talking about like the buses moving left and right, when you have a candle that's moving bullish, it makes no sense to take a sell when price is basically printing against you.
Yep.
It doesn't make any sense. So you'd want to wait for price to print in your favor and then take a sell and really remove but from your vocabulary when you're trying to trade.
That is so, so, so important. Rajs, seriously, thank you for that. Guys, make sure you go back, rewind that, and take notes on that. Really important reminder for the start of the week, because a lot of us have that clarity on the weekend. But once you get into the trading week and you're taking trades left and right, your work life is busy, your life is getting hectic, some of the obvious and fundamental things kind of go out of the window. So that's something that I really hope that you guys paid attention to. Now let's shift gears a little bit, Raja, to something else that I heard you say in the live stream that I think is really interesting. It's the difference between losses. Like some people analyze their losses and some people avenge their losses. So can you talk about that concept a little bit?
Yeah, it's funny you asked that because we had a webinar this morning based on this topic. Yeah, we had a webinar, and avenging losses, it's basically, I mean, you have to see why you're avenging losses, right? So let's say you take a loss, maybe your entry was too early. You're like, okay, I'm going to take a second entry. This was too early. You take a second entry, you take a loss, and now you're down. Now you're like, oh, okay, so we're down for the day. Now I have to recover this loss. So when I talk to new traders, the first question I ask them, what's their experience? And the second question I ask them, what do they do when they take a loss? And overwhelmingly, the majority people say, yeah, so when we take a loss, our goal is to make that loss back. And my answer is no. You should be looking at that loss to say that, okay, why did this happen? If you took this loss, that means your trade idea was wrong. Let's say if you took a sell and price moved up, someone took a buy. Someone took a buy and they made money, and you took a sell and lost. So instead of saying that, okay, I want to avenge this loss, or maybe this was a test position, or maybe I increased my lot size and market saw that for some reason and tried to attack me. That's what some people say too. Hey, I increased my lot size and market knew about it. No, it's because you were wrong. So when you're analyzing losses, so whenever you take a loss, you need to take a break. What I do is I take like an hour, half an hour break from the chart just to see what's going on. Because I know that if I'm a profitable trader and if I took a loss, that's a huge deal for me. Because instead of making money, I lost money, and losing money is no fun. So whenever you're losing money, you have to be very mature about it. You have to say, okay, what did I miss? Was there something I didn't look at? Was there something on the lower time frames that could have made sense? Like, what was it? And I can guarantee you 8 out of 10 times, you will automatically understand that exactly something you missed. It could be that the 4 hour was about to close. It could be that you had confirmation on the 30-minute, but the 1 hour confirmation wasn't there, or it may seem like that the 30-minute or the 1 hour did break a resistance, but on the smaller time frames, you saw like a minor resistance. So when you start analyzing losses in that way, you start to come up with your own conclusions how this trade was actually the opposite trade, right? And when you start to do that, you start to learn something. This thing I talk about, when candles close with no wicks at the bottom, it means there's no range for the next candle to go down. I didn't read this in any book. I saw this on the charts, and I would see that I would take sells, and most of the time I'd get stopped out. So I looked at it, I'm like, okay, why wouldn't it make sense? So I came to a conclusion that, okay, if candles have wicks, and wicks do get filled in momentum, when a candle has no wick, this means there's no range for the next candle to go down. So maybe it's a good idea, whenever I'm faced with a candle with no wick at the bottom, if it's going bearish, it's a great idea to maybe just sit back and just don't execute anything on that point.
Wow.
So yeah, man, like,
That's honestly, it's not like a small thing. That's something that I use personally that changed my life, which has helped me develop my current strategy, which is it sounds so simple. Just think about the other side, right? If you lose a trade, what did the people who won that trade, the people that made money on that trade, what did they see that you didn't see? And I
Mm.
realized that I was actually, everything I had learned conventionally was actually not conducive to profitability. I was doing the opposite of what I do now. So when I first
Yeah.
started trading, I was literally doing the opposite, and I was losing, let's say 70% of the time, 80%. And then as soon as you just switch your perspective,
Yeah.
you realize that your profitability changes. So that's, I think, really important, is thinking as your opposition. That was
How
one
did
of
you
the
start?
conversations.
How did you start anyway?
Me, I started trading cryptocurrencies because one
Okay.
of my friends, he was an early crypto investor, and I saw him start to hit big in 2017. And so I
Mm.
was like, oh, I kind of want to do this. And so I started investing into different alternate coins. And then I was like, I kind of want to trade this stuff because they're moving every day. Started doing that. And then my friend Joseph, he actually put me onto Forex. I did IML for a few months. I was like, dude, I don't want to sell anybody anything. Like this
Yeah.
trading thing sounds like such a good idea. You know, I don't want to disrespect any company, but
Yeah.
I personally didn't feel the need to go out there and recruit and sell for something that
Mm.
is so much more profitable and time. It's just time efficient, which
Mm.
is my priority. And so, yeah, 2018, I started early then, and then we're here now.
Nice, nice. And then you started the podcast, and yeah, it's pretty good.
The podcast is honestly like 2 months old. We just started
Oh.
the podcast. Yeah. Because we started Chart Addicts about a year ago. We were
Mm.
trying to provide a cost effective alternative to education. And then we realized that education is useless. Like you can get it almost anywhere, and the application of the education is the most important thing. And so now what we are is we're a retail coaching service,
Mm.
right? It's like when you feel like you're not going to run to the full 100 yards at the end of the field, I'm going to be breathing down your neck to make sure that we get you there. And I feel like
Keep
that's,
going.
yeah, I feel like that's just more important than knowledge, because knowledge is
Yeah.
not power. It's
Yeah, that's true.
potential power, you know?
Yeah.
So yeah, so Raja, back to you. This is your interview. I saw you trying to flip the script. So Forex and trading in general, other markets, let's say equities, they have structure, because
Mm.
let's say that there's circuit breakers in case things go very wrong. There's laws against manipulation. When you talk about Forex, there really isn't again any laws against manipulation in the markets, and there's no structure around it, because you can lose infinite amount of money and you can also make infinite amount of money. So how does somebody build structure in an infinite market? In something that literally has no boundaries, you're in the middle of the ocean, which is what Forex is. How do you build structure around that to get you a disciplined system?
See, that's a very interesting question. And to answer that, I want to tell you a story. So I have this one friend of mine, I'm not going to name him, and he got caught in a flash crash in October 2017 when Pound had a flash crash just after Asian Open. He had an $18,000 account and he had buys, and the whole thing just dropped. Whole thing dropped. He lost all that account, and at that point I realized that, okay, well, if I'm trying to swing trade, now this doesn't go against anyone who's trying to swing trade or whatever, just like my experience. So if I'm trying to swing trade, this can happen at any time. Like flash crash, there's no news, like no one emails you that, hey, there's about to be a 5,000 pip flash crash, so just get out of the position. It's never like that. And then I had to really change the way I viewed the markets. I had to really change the way, and I started looking into when do these flash crashes normally happen. Because I wanted to know why and how. And um, the only information I found was that most of the time flash crashes happen when there's low volume in the market, like your market switches at like 5 p.m. Eastern, when the new daily candle starts and there's no volume. After Asian, there's no volume, like around, at midnight or 1 a.m. Eastern. And there were normally never a crash that happened during the London session or the New York session. And what I read was that the reason why flash crashes can't happen in those sessions, because those are one of the biggest markets open,
Yeah,
right? And if you have a flash crash during a London session, oh man, there's something very, very wrong
yeah.
if something like that happens. So I really had to make a point of really, like, if something like that was to happen, I would make sure that I'm withdrawing consistently. You,
Wow.
right? Because like I would see people, they would run up their accounts, you know, they run up their accounts from 1,000 to 15,000 dollars. I saw this one guy, he was in our group, he ran his account from $50 to 1,500, didn't withdraw, ran it up to like 4,500, ran it up to like 15,000 in like 2-3 months, didn't withdraw a penny, you know. And then traded news once, traded news, lost half of the account, and then just fell into that cycle of over trading, and it then just blew it all, you know.
Wow.
And he did that 4 or 5 times after that, you know, until he realized that, okay, the power is in withdrawing. Because we get so lost in like compounding, compounding, compounding. No, I have a job, I'm getting money on the side, I just got to compound this account to $100,000, you know. But the thing is, when you withdraw money, you feel it, you know, you feel it. Like when you get that money in your bank account, even let's say you're withdrawing $100, you know, your bank account goes from 800 to 900, you're like, oh shit, I'm at $900 right now, you know. And that came from the markets, you know, because when you don't withdraw, you don't get to feel that excitement. Yeah, exactly, right? In money, like you don't get to feel that excitement.
Yep.
So I think if someone's new here, they're trying to really structure their trading based on like, you know, potential crashes or not. I would say focus on, like, you know, number one is going to be consistency. Focus
Mhm.
on a set time that you need to trade, you know. And your best chances of not getting caught in a flash crash is to trade when there's volume in the market,
I see.
right? So
Trade during the largest volume sessions, keeping it to New York and London.
New York, London, Asian is also fine. Asian session normally runs from like, I think good volume time is between 7:30 p.m. Eastern till 9:30 p.m. Eastern. You get this window of like 2.5 hours,
Yep.
right? Beyond that, there's a lot of like, you know, ranging happens because, you know, like the volume dies down, and then price has to move with a lot of volume later on in the London Open, so it needs to consolidate first a little bit.
The reason I love your trading style is because it takes into account something that is called Murphy's Law, which is that if
Mhm.
anything bad can happen, something bad eventually will happen. So if the potential for a flash crash exists in markets, then eventually if you're trading, you're going to be caught in one of those flash crashes. And what you always take into account is that anything can happen. So just play your game based on the fact that the next candle could print against you, or play the game as if these next. And so I really like that approach, which is just don't get too arrogant in, no, this market's, it has to go this way or it has to do one thing. And I guess that's where the fluidity came from, if I'm not
Yeah.
mistaken. All right.
Yep. The whole concept of being fluid in the markets was actually reading the candles. You know, like if you're, let's say if you're buying from a support and you're like, okay, New York Open is going to start now, and candles are printing bullish, and you know there's going to be volume in the market, and price does starts to go bullish, and you're like, okay, perfect, we're in a buy, price is moving bullish. But then you see candles that start going bearish. You know, when candles start going bearish, then you start to look at that, okay, candles are starting to go bearish. If the 30 minutes closing bearish or the 1 hour is closing bearish, what's the probability that the smaller time frames can now start coming bearish
Yep.
while you're in buys? You know, so you have to recognize that, and then you have to make a decision that, okay, maybe I want to secure some profits at this time, or I want to let the whole thing run.
Okay.
You know, so those are decisions you have to make. And I came to the conclusion that if the 30-minute closes bearish, then there's a higher probability that the next one is going to continue bearish as well. You know, so then I had to be fluid at that point to know that, okay, maybe this is the time I need to close partials and let the rest run with stops at break even. Or like another thing I tell people is like, whenever you do your analysis, always look to see what would make price go bullish and what would make price go bearish. You know, I see a lot of people when they send me charts, they don't map out those two ideas. They only map out a buying idea. You know, so when you've mapped out your buying idea, you have a very straightforward line that, okay, I'm looking for buys and that's it. You know, so when price does move down, you don't know when price is moving down. You're just like, I don't know why it's moving down. It should go up, because you haven't planned for it.
Yep. Can you explain the difference between people? Because I feel like there's two different kinds of people that send the conflicted charts, the buy and sells. Can you tell the difference between the people that are scenario building, which is that here I'm preparing for possible scenario A and B, or the people that are just conflicted and so they just give two options because they don't really know or have a bias? Can you talk about those differences, or is there a difference?
I don't think there's much difference in that, because like if you're planning out both biases and you're disciplined enough to just wait, I think you can learn a lot from it. Because let's say if you're planning for buys, but you also have sells in the back of your mind, and price doesn't break up and it starts breaking down, you know automatically what's going to happen now. Now you're ready. Now you're like, okay, you know what? I'm a good trader. I planned out both biases and I'm fluid. So I was looking for buys, but hey, I see that it's breaking support. It's creating like a retest. It's creating like, lower highs or lower lows on one of the time frame candles, and you see that there's a range where price can fulfill coming down. It would just make logical sense to take a sell,
Yep.
right? But if you don't have that mapped out, and if you see someone else taking sells, now you're just confused. Now let's say you're in buys and price is breaking down, you're just confused. You're like, why is it breaking down? Why doesn't the market like me? Because you didn't plan. You didn't plan for that, and you're just stuck in your mind with these buys and drawdown, and yeah, it just goes
All
super
right.
bad.
Let's move. Let's move away from technical analysis. I want to ask you another thing something that you mentioned, which is how having the accessibility to a trading platform at all times on your phone is actually not conducive to building or to having discipline, because it's always at your fingertips. You can take a trade whenever you want. How does having it accessible, and we're about to wrap up here pretty soon, this is one of the last few questions, but how does that accessibility impact the trader's discipline?
Man, these systems and these platforms, they're built to make you fail. The sooner people realize that, the better off they will be. So I'm not sure if you've heard the story or not, but I had this friend of mine. He's been trading since 1995. And the way they would start trading was that they would get these raw numbers, right? Let's say they would get a raw number on USDJPY and the number is going to be 105. They will write down that raw number at 105. An hour later, they will get another raw number. So they will keep track of these numbers, right? An hour later, they will get another raw number. So imagine you have 150, a number you got. An hour later, you got a number at 200,
Mhm.
right? So you have a lower number and you have a higher number, right? And within that hour, they got an even lower number, which was 130, and they got an even higher number, which was like 250, right?
Mhm.
So now they've built a candle.
I see.
Candle opened at 150, closed at 200. The highest peak was 250, and the lowest peak was 130. And they would spend the next 3-4 hours drawing these candles. And after a day or two, they would have multiple candles, and now they could take a trade based on candles.
Wow.
Can you imagine that?
That's insane to me.
Can, can you do you have the patience to do that now? No, right?
No, but in perspective, it makes what we do now makes so much more sense when you understand the backstory behind it, when you understand how they used to notate it.
Yeah, and now when we have these platforms, you have access to the 1 minute chart, you have access to the 10-second charts on TradingView. You have access to 5 minute, 15-minute charts. With a snap of a finger, you can put your money at risk. You could put $1,000, $1,500 at risk just like that. So these platforms, they're built for us to fail. These platforms are basically built by the brokerages to entice people to overtrade, over risk, trade news, because back in the day people couldn't trade news.
Yep.
Like they had to move through a lot of hoops to trade news. And if you told somebody right now that, hey, for you to take a trade, you need to run a mile lap, and I can guarantee you no one will do it. They'll
Yep.
say, yeah, let me think about this.
Yeah.
So
I didn't mean to cut you off, but
yeah.
I did that before. It's this was probably like 8 months ago, as I
Mhm.
was having problems because I was live trading SPX and I was trading the indices and they move very quickly. And I was like, I keep wanting to enter the trade really early. So I had a ritual. I'd go do 10 push-ups before I enter the position. And I was
Yeah.
like, by doing that, you actually stop yourself from doing stupid things, etc. And then eventually you can take that training wheel off and then just cruise on the bike. But yeah,
Yeah.
those things really do help. Raj, I want to ask you kind of a personal question. If you don't feel like answering this, you don't have to. But this is how did having children affect your discipline? Do you feel like you took trading a little bit more seriously when the fire got lit in that regards? Or have you always been dedicated and it was just an extra fuel that was added?
It's funny you asked this. it basically improved my trading. Now, this is not to say just go have kids, you're gonna get better, but it actually improved in a sense that so when my son was about to be born, and when he was born actually, we wanted him to, like, start running and start talking, this and that, but we knew it's gonna take time. We knew it's gonna take him like like a year or so to just start moving and stuff. So basically, I put that in perspective with trading accounts. Like when you start trading, your account is like your baby. And you need to be patient with it. You need to really like love it and care for it. You need to protect it from, like, corners of a table or from stairs. Like your account, you need to protect it from news, from times when there's high spreads in the market. Because most people don't know this. When you have high spreads, that means it's just expensive to trade, right? So when news happen, the spreads jump up. So spreads jump up because now it costs more to trade that pair. So I mean, I think it really put in perspective like a lot of things based on discipline. And one major thing that happened was, and I'm not sure it's happened to everybody, that I used to host the Asian sessions as well. But once my son was born, I knew that the only time I could trade was in the morning, because in the morning, he's sleeping, my wife is asleep, so I have all the time to do whatever I want. But then in the evening time, I didn't have that luxury of time at that point.
Mhm.
So, but what happened was my profitability went up after I eliminated the Asian, because what was happening was, now in the Asian session, sometimes you're gonna have, like, less volume. Sometimes you get stuck in consolidation, so you take those odd losses here and there. So when I eliminated that session, what happened was I also eliminated those odd losses I would get. Now my wins in the New York were the same, but once you eliminate losses, your wins, they look bigger because now you don't have those losses anymore.
Yep. Well, that's really good, Raja. I really appreciate you for stopping by. We only have one more question,
Mm.
and yeah. But before I got to that last question, I really just want to say thanks for coming on, giving out all this incredible information. Um, okay, so the last thing I want to talk about is something that I personally dealt with, and this all the questions that I ask as I'm trying to relate to the trader that's listening. Is I promised you guys a year and a half ago I was just around that corner. And I still remember a lot of the things that I went through, and I'm trying to make sure that we can clarify some things to people. You said something right now that reminded me of the last question, which is you can't overtrade if you don't have the time to overtrade. And you were talking about how if you owned a business or you had a job, if you actually were doing your job well or you're running your business effectively, you don't have time to overtrade. And the only time that it comes that when you have time to overtrade is, when you're not doing what you're supposed to be doing somewhere else. Could you talk about that?
Yeah, I think over trading, it comes to the fact that how efficient you are. Like when you're looking at the markets, when you're, let's looking at a certain idea and you want to execute on that idea, and you know that this is the only idea you execute on, this is where your efficiency. And man, listen, you're going to be surprised how efficient people can get. And that's only to say that, okay, like you have someone like, let's say, some trader X who only trades the first 2 hours of the day, and he only focuses on those first 2 hours of the day. He will know the in and out of what happened in those first 2 hours. And that's going to be your efficient person there, who will be only executing on those 2 hours, right? But let's say when you're busy, let's say after those 2 3 hours you have somewhere to go, or you have a job, or you have a business, now you're occupied in that business, right? So now you're being efficient in that domain. Right now, during that business, if you involve trading in, that's just going to fall apart. A great example is when I first started trading, I was doing we had a company, and we were basically running a door-to-door sales agency. We had 20 agents with us. We were making a bunch of money. And what I was doing was I would have time in the morning to trade from 5:30 to 8. By 8:30, I would go to my office, and we would prep the agents. We would do some, like, like some pre-sales meeting and stuff like that. And then we would drop them off to their, like, locations where they had to go. And then around 12 or 1, I would have downtime. You know, from like 12 to 1 till like 5 p.m., I had no one to bother me. And that gave me room to look at trades,
Mm.
right? So when you're looking at trading at downtimes, that's when problems start happening. You know, that's when you shouldn't be looking at trades. So like, you know, with my job, I mean, it came with a curse and a blessing. You know, curse was I had time to overtrade, you know, but like if I had a regular job, I wouldn't have time to overtrade.
Wow. Priceless
Yeah.
information. Really priceless information. Rajat, thank you.